This week's theme on the Retirement Quick Tips podcast is, are the new Bitcoin ETFs a good investment? Today, I'm talking about some of the risks of owning Bitcoin, why I'm not buying the new Bitcoin ETFs for my clients. So first and foremost, I talked about this yesterday. So yesterday, I talked about my thoughts on Bitcoin because I covered this at length on the podcast back in June of 2022. So it's been 2 years. I wanted to revisit my original thoughts on Bitcoin, but today I want to expand on that a little bit further because I mentioned yesterday that first and foremost, with the risk of owning Bitcoin is that it is speculative. Speculative investments are high risk, short-term investments. You buy an asset with the intention of profiting from market fluctuations. That is the definition of a speculative investment. You just put that definition in the dictionary, you put the Bitcoin symbol right next to it because that is basically the best way you could describe investing in Bitcoin. High risk, short-term investments, you're buying it, there's no fundamental value there, and you are buying it with the sole intention of making a profit. There's not really anything there to back it up. So like when you buy a stock or when you buy real estate or when you buy something else that is a legitimate investment and not a speculative investment, there's something there. If you're buying real estate, it's a piece of property. You own a land, you own a building, you own these things. There's something there to justify the value that you're paying. Same thing is true with a stock. A company will have earnings. They might have a dominant market position. They have cash flow. They have all these things. There is a way to justify whatever value or price that a stock might be trading for. Now, you might have a stock that is overvalued, like it's trading too high for what the fundamental value is of the company, but there's something there still. With Bitcoin, there's nothing. As Nouriel Roubini said, I quoted him yesterday, he said it's vaporware, no fundamental value there. Those are the primary problems. Speculative, it's volatile, very volatile. And while there's lots of people who have made money in Bitcoin by timing it right, you get in at the right time. And a lot of people doubled their money, quadruple, 10x their money. It all depends on when you invested. But the same thing is also true on the downside. If you're curious about this, pull up like historical chart of Bitcoin and you'll see exactly what I'm talking about. It looks like the Himalayas. It goes up and it goes down and it goes up and it goes down, and it's extremely volatile. The other aspect I think that comes up quite a bit, and one of the justifications for buying Bitcoin is that it does have some attributes of currency. Its primary source of value, though, lies in its restricted supply and increasing demands. There's only so many Bitcoins, and there's more and more people getting into it, and so that kind of drives the price up. But at the same time, there's no earnings, there's nothing to back it up. The reasons why Bitcoin might trade at 60,000 one day and 30,000 the very next day, they're not based on any underlying factors other than the ebb and flow of demand and who's buying and selling. So the primary reason why I wouldn't buy the new Bitcoin ETFs for myself, but especially for my clients, is because it is so speculative. I don't buy speculative investments for clients. I buy actual investments that have fundamental value. It's what a good financial advisor would do. Most financial advisors, if they're worth their salt, are not putting their clients in speculative investments. And also because it has no fundamental value or justification for whatever price it's trading at on a particular day, there's no justifiable reason to buy it or to assume that it is going to continue to go up. Because again, that's just driven by what the demand looks like for it. And as time passes though, it could become less speculative. It could become more stable. That is certainly possible as the Bitcoin ETFs now, because they're easier to trade, they're much more accessible. You might find that actually provides some more stability in the market. But I'm not going to invest and find that out, putting my money or my client's money on the line. I'm okay with missing out on gains if Bitcoin continues to go up from here. And we'll talk about that because this fear of missing out, this FOMO, is what's driving a lot of people into the new Bitcoin ETFs. And I think that's actually a mistake. I'll talk more about that tomorrow. All right, that's it for today. Thank you so much for listening. My name is Ashley Michike, and this is the Retirement Quick Tips podcast.